Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is the video research from the ForexPeaceArmy.com dedicated to the euro currency, and as usual we will start from the daily time frame and continue our discussion of the situation on the currency of Euro Union. So in general we see that on the daily time frames nice bearish momentum currently, because market is showing really solid thrusting bars to the downside, so it tells us that probably the bearish momentum is still solid. And the recent price action, as we discussed yesterday, was absolutely logical from the perspective of the continuation move to the downside, because market from that pattern A, B, C top has hit 618 extension, has shown just the 3-8 retracement from the whole swing down. That is absolutely logical after the reaching of such targets, and then continue move to the downside. Yesterday we said that since market has hit the target of the more recent ABCD pattern A, B, C top, D 134.21, then it probably could show some retracement to the upside, since this is very common price action in the market completes ABCD patterns. It show at least 3-8 retracement to the upside. So yesterday you could see that this has happened. So that is the 3-8 retracement from that swing, from that high to that low. So the high was around 135.58. You will see it in more details on the hourly time frame. And now you can see that market, since the market hasn't quite reached that target during the previous trading session, it has hit it today. So you can see that market still continue to the downside, renew the lows and hit the target. That's why I feel not very comfortable when some target stands behind me. So I try to not enter on the long side of the market until market will hit some significant target. Okay. So and now shows also some retracement to the upside. So you can see that market during the previous trading session stands in some range, and the intraday environment tells me that probably market could show a bit deeper retracement to the upside. A bit later you will know why. Well, in general, on the daily time frame we see the continuation. We expect the continuation to the downside from that pattern A, B, C top. The 100% extension from that pattern stands right here, 132.42. This is 100% target from that ABCD. This is 88 support, fib support of that swing. Also just slightly above that area stands the monthly pivot support 1. I do not have it on this chart, but it stands in that area. So that will be the next potential target, next move to the downside. But meantime, in the nearest future, market could show some bit deeper retracement to the upside. Well, at least there are some signs that, some signals that tells us that this is really probable. Now let's shift to the 4-hour time frame. On the 4-hour time frame, you see that ABCD pattern that we have discussed. Also pay attention how it has happened. Market has shown retracement to the upside, then returns back, hit the target 134.21 right here, pips to pips, and returns right back. This is some kind of the wash and rinse of the previous lows, and this is short-term bullish signal. Also, if you are familiar with the Judd Napoli framework and his approach to the financial markets, you see that this situation is a bit tricky. Why it's tricky? Yesterday we said that since this was the nice thrust to the downside, market has the potential for either bread and butter sell trade or double repo buy. They are a bit different. The bread and butter trade is the continuation pattern, and also it known as momentum trade. The major idea of this pattern is when market has nice gain, nice momentum in one or other direction. Currently we have downside, and it shows the first retracement. Usually this retracement sold out by new participants who enter on the market, and market due to the momentum continue move to the downside. That is the context for the bread and butter trade. The double repo pattern is quite different. This is the reversal pattern, short-term reversal pattern. And how it works. The context is the same. The strong momentum to the downside. When the market shows the first retracement. It should not be too deep to avoid the profit taken by the market participants. Then market tries to continue move to the downside, but can't, and show the close above this green line, this 3x3 moving average, and by closing of that above this line, market shows the capitulation of the bearish players and tells us that probably retracement to the upside could happen. The major trickness of current situation is that during the first penetration, that was the bread and butter, since market has hit significant area of resistance that should not happen during the double repo pattern. Well, that is the 4-hour confluence or resistance that we discussed yesterday, 135.58, 135.63. It's right here. So that was classical bread and butter trade, since market has shown too close above the green line and hit significant resistance. Later it accomplished the target, 618 support from the whole swing against the major trend. Okay, so the bread and butter trade has been completed. But look what happens now. Market renew the lows. That is very good for the double repo pattern, since the showing the new lows force the breakout traders to step in the downward continuation. But now they are trapped in the wrong position, because market returns right back, showing wash and rinse of the previous lows, and continue move to the upside. That is good for the double repo. So you see that usually bread and butter trade and double repo trade couldn't combine together. Well, but currently we see that in general this price action could act as the double repo, since although market has shown the significant retracement, it at the same time has shown the new lows that a bit restore the equilibrium between those who take the profit during that retracement and those who step in by breakout of that lows on the short side of the market. So there are a lot of positions inside this price action currently in the wrong way, since those who entered short by that breakout with this lows now trapped in the wrong positions. And when market, and if the market also accelerates to the upside, they will be stopped out. That will add fuel to the further continuation to the upside. Well, from that perspective, I suppose that market at least could reach the same highs and renew that highs around that area of confluence support. The ultimate target that is very probable is the hitting of that area of confluence. It's around 136, 136.50 area, which is approximately right here. Precisely speaking, 136.25, 136.50. It's right here. That also could be reached if market will break that area. So what we could do in current environment? Let's take a look at another 4-hour time frame. Now I draw this red line. This is MACD predict indicator that shows us the trend. So what we could see here, that is the stop grabber pattern. So you can see that those who enter short have seen the shifting trend by MACD to bearish and the breakout of previous lows. That was really solid signal, but since the market has not closed yet by that bar hasn't been closed, so they are stepped in by the unconfirmed trend shifting. Okay, and later market has returned right back and trapped them in wrong position, because now trend holds bullish. Okay, and market just washed out the previous lows, take out the stops that has been placed just below it, and accomplish this target. That is the reason why the market creates the new low. Now it returns right back. Based on that pattern, the stop grabber pattern, the minimum target of this pattern is the taking out of the previous highs. It's right here. It's around 135.50 area. That's why I tell that probably market will renew at least these highs. An ultimate target that we could count on is the continuation to the upside. It's right here. On the hourly time frame, we see another confirmation that market could continue further to the upside. First of all, we see that nice double bottom pattern. Market has shown the new bottom in that area and renew the lows and returns right back. The classical approach of trading that patterns is the target of that pattern the same as from the top bottoms to the neckline that counted to the upside. That coincides approximately with 136.50 area and coincides with this 1618 extension target of the potential double repo pattern. Okay, that's why I suppose that market really could continue move to the upside. Besides, this current environment let us to place very tight stop, since our major point is right here. Market now, if it will really intend to continue move to the upside, has no reasons to renew that lows or continue move to the downside. So if this will happen, it tells us that double bottom will fail, the double repo will fail, and probably market will continue move to the downside. Also, the moving and close below that low will cancel this stop grabber pattern. Okay, so that is our major area to watch for, and that is our major area where we should place our stops, just below that low. Because market already has shown wash and rinse, clear out the stops from that area. Market has accomplished ABCD, so that's no logical reasons to create the new lows currently. Well, the minimum target is the highs around that area. The probable target, also we can't exclude that market could continue a bit further, is 1618 extension around 136.20. That is the target of the double bottom. That is the target of this ABC bottom pattern and this area of agreement. That's why I think that market could continue a bit higher. So that's my current view on the situation. If market will break that low to the downside, then probably our expectation of the further retracement to the upside will be erased by the market price action. But currently it looks so that the continuation is very probable. So this is our crucial level to watch for, as the clue for future behavior. To possess ourselves in the continuation that retracement, if you would like to enter on the long side of the market, drop your time frame maybe to the 15-minute chart, watch the retracement from that swing. If market will show some retracement from that swing to the downside, then probably could try to enter on the long side of the market. Stops should be placed below that C point around 134.20. So place the stop somewhere below that area.